Afternoon. How are we all doing? Happy Monday. We didn't win the football day. Usual England performance. Not winning, obviously. Never mind. All good fun. Afternoon, Steve, Yotko, Callum, Fetch, Crom, Chucks, Reverend, Ryan, Simon. Hi, I'm new here. Hi, Simon. I'm regular. Afternoon, Harry, Yusuf. Yeah, a bit of crap, wasn't it? Meh. Usual. I don't know why we expect to win. We never do. Anyway. Afternoon, Joseph. Excuse me. Obviously, wasn't on this morning. I was anticipating having a big hangover this morning. I was absolutely fine because I basically couldn't be bothered to drink because it was crap. Anyway, Palmer should be first. Many players should be first, but they weren't. That's why we lost. But anyway, everybody becomes an armchair manager, don't they, during the England matches? Afternoon, Monkey. XRupdate.news. On other news, Trump nearly got shot. I was half expecting the US dollar to be catastrophically down, gapping this morning, but it wasn't. It actually gapped up, weirdly. So we had a very small gap up on the dollar from there to there. So obviously everyone was very happy about that. But anyway, so weird. Can't believe they actually managed to get a shot off on him for a start, and they missed. So yeah, everybody's been missing this weekend, haven't they? We missed the football. They missed Trump. Anyway, afternoon, yeah. So I was expecting a bit of a move on the US dollar this morning, but we didn't get it. There was a gap up in the dollar, which was really weird, but it's obviously done all its gap fills. So we'll see what happens today. US dollar seems a little weak today. Not massively, but obviously it's pushed up and pulled back down again. So not really an awful lot you can read into it today so far, but we'll see what happens. So we'll start off with the news. Over weekend, obviously, there was very little apart from Trump getting shot at. Apart from that, market's very, 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 very quiet. Not a lot of news coming out of anything over the weekend at all. There's no news today apart from we've just had the US Empire State Manufacturing at 1:30. Where's that gone? That's not in red for some reason. Don't know why. Don't know why Financial Juice didn't bother putting that in red, but they haven't. Anyway, so that came out at negative 6.6 on a forecast of negative 5.5. So it's worse than expected numbers. So a little bit of a downtick on that. Not a lot, really, as you can see. In the last hour, we've had very little movement on the US. So market's not really paid any attention to that. We've got Powell speaking later on. So we'll watch what happens at 5 o'clock. We might get something out of Powell that might shake the market up this afternoon, but we'll have to wait and see. So apart from that, there's no real other scheduled news today. It's a quiet day today. Bank holiday in Japan. So the main news we've got this week coming up is Canadian dollar at 1:30. We've got the CPI numbers tomorrow for that. So that's a big one. We're expecting a tick down by 0.5% month on month. And we're expecting the yearly to either ever so slightly come down or remain as is. So the Canadian interest rates, I think I'm on the wrong page on my website. I am. So the Canadian interest rates have started to come down. If we get a downtick in inflation tomorrow, then there's a good chance they'll do a second drop month after month, but we may not get one. So we'll wait and see what happens. So we had a 0.25 drop in the CAD. We're at 2.9, and it's ever such a slight tick up last month. So we'll see what happens tomorrow. So that's the main news we've got coming this week. We've got retail sales coming tomorrow afternoon as well, along with that. And then we've got the CPI for the pound and New Zealand dollar kind of overnight Tuesday, Wednesday. This, I think, is not going to happen. The annual CPI is forecast to drop to 1.9. I get the feeling we're not going to move from 2 and possibly slightly tick up. So that might give the pound another bit of a rally. But if we get that 1.9, those interest rates have got to come down. So we'll get a drop on the pound on Wednesday morning. So if we get anything less than a 2, which will be a 1.9, we will get that start of movement to the downside on the pound going, because they will think interest rates are definitely coming. We've still got nothing coming from Bailey this week. No news out of Bailey, out of Bank of England, as to what's coming on. So we'll have to wait and see. Aussie unemployment on Thursday morning. We've got the pound claimant count, which doesn't do a great deal usually. And then we've got the main news of the week, apart from the CPI there, which is the euro refinancing rate. They're not going to be changing the rates on the euro. We're 4.25. Lagarde has come out and said that there's a good high probability, 90s plus, that we won't change rates. Because inflation hasn't come down again. So there's no reason to drop interest rates. This is the pause month. Next month will be the drop month. So we should get a reaction to that. Whether or not it's bullish or bearish, we'll have to wait and see. But overall, the euro is bearish long term. Unemployment claims Thursday afternoon as well. Excuse me. ECB press conference at 1:45. So this is when Lagarde will lay out forward guidance and tell us what they're going to do with interest rates next month. Likely she'll be bearish on that. So it should be bearish euro. Then we've got retail sales for the pound on Friday and the CAD retail as well. So the main two impact news events we've got are tomorrow afternoon for the CPI numbers for the CAD. In fact, there's 3 really. The New Zealand ones we've got as well. Less so on that. I don't think that's going to make a massive difference. But 7 o'clock Wednesday morning for CPI for the pound. And then we move to the euro rate on Thursday afternoon. So tomorrow, Wednesday and Thursday, every single day, big impact news. So it's spread throughout the whole week. So we should get a decent amount of movement up and down this week, hopefully. Fingers crossed. Afternoon, George, Virginia, Brian, Dev, how are we all doing? So that is your forecast news coming up this week. The dollar, obviously, we need to wait and see what happens. Trump is speaking at some point this week. I don't know what day it is he's doing the Wisconsin thing. Assuming he doesn't get shot at again, and depending whether he's nicely, let's all stick together, or whether he goes all out against the other party, may well have a big impact on the US this week. Don't know when it is, but it's some point this week, isn't it? I think it's a Wednesday or something. He's scheduled to speak and be elected as the official candidate. So we need to be aware of that this week. Might get some movement off of what goes on there. Afternoon, Evil. David, how are we doing? So today, we've got Aussie, New Zealand. I'm going to go through the ADRs quickly. RSIs, there's quite a few of RSI extensions. Most of these are pound and euro based because we're getting these big moves at the moment on those two. We've obviously got some yens in there as well, but I'm going to go through all the pairs anyway, so there's no point in going through them individually. But ADR wise, Aussie, New Zealand, we've had an ADR hit to the upside today. We had a gap down from Friday, ever so slight, wasn't very big, about quarter of an ADR. So we've got a 150 ADR extension to the upside. 125 ADR extension to the upside, just shy of 150. Market opens in 3 minutes. So we're waiting to see what's going on with this New Zealand dollar. That really, there is no need for that move to the upside on this New Zealand dollar at all. So I like the look of this for a short. We're just breaking out of those recent highs here. I don't think really there's any reason why that should be breaking out. We didn't change the interest rates on the New Zealand. We've got the New Zealand CPI numbers coming this week as well. So if they come in as bearish, this thing's going to get a little bit more of a kick. So hopefully we get a bullish bounce on CPI and the New Zealand dollar, and that starts that retracement back down into these lows, which is the previous range low. So there's no reason to break out of this range that I can see, really. If we do, we're moving back up into that wider range area, which is kind of that little outlier there. So it's got a hell of a long way to go. There's no way, after being parabolic for the last kind of month and a half, this thing's been going up. There's no way it's going to be able to retain a parabolic move. If you look at that move there, look at that move there, look at this move here, look at this move here, what follows afterwards? Always a retracement. It's not going to be able to continue up to there without pulling back. So either way, this is either a false breakout, and we're going to pull back this week on positive CPI numbers from New Zealand, or it's just going to naturally pull back. So this interest rate change that we got, or rather didn't get, from the New Zealand last week, absolutely no reason for that knee-jerk reaction. Market hasn't continued the move. It's just trying to get out. So that's a really good ADR reversal opportunity there, short. 1 minute to the news. I'm in a hedge on the DAX. FTSE was a nice, well, it wasn't actually. The FTSE was a hedge this morning as well, but I got out of that with a nice recovery. So that was a really nice, easy exit today on the FTSE. I'm just toying with the idea of whether or not to get out of this DAX. Okay, might leave it where it is actually. Basically, the FTSE's paid for the DAX hedge, so it's a break-even morning. So I might just leave it as it is rather than try and get out of that, just in case the open is bearish. Speaking of the open, today is the start of the main earnings week. So no, we're not. Sorry, it's next week. It does pick up this week. So we've got BlackRock and Goldman's pre-market, Bank of America, Morgan Stanley, United Health, Johnson's, and a couple of others in there, Netflix on Thursday, American Express, etc. But next week is when it really kicks off. We've got all the big names next week. So market acting very weird during earnings at the moment. The last few earnings releases, we've had a very tight, restricted market. So the opens might be a little bit tricky while we've got earnings on, but we'll see. Bloody hell, Dow's gone. Dow's, wow, look at the Dow. Some serious volume coming in today. We have had earnings this morning on a couple. It was Goldman's, wasn't it? And someone else. Better than expected, Goldman. Burberry's dropped us. European stocks lower as markets assess. Not really, is it? Massively low, is it? Hasn't it ADR yet? But yeah, so we might get some volatility coming in today off the back of what's happened with Trump. Obviously, the market's opened. Might be a little bit of fear mode in there, which would potentially drop the US dollar and might pump a little bit on the indices, but we'll see what happens. So long on the S&P and long on the Dow so far. No pre-market range on the NASDAQ. Let's give those a couple of minutes. Just go back to the ADRs while they're deciding what they're going to do. Big move just coming on the Aussie New Zealand as well. Look. Big sell starting to come in on that. Looks lovely reversal. Just about to get an hourly reversal alert on that. You've had the 15-minute and the 5 already. There's your 5-minute M pattern reversal. And sorry, your 15, and there's your 5. So you did have a reversal alert there this morning. It's just invalidated the high. So that's your second alert, which is pretty much the same spot. So it looks really good for shorts, that Aussie New Zealand. The other ADR extensions we've got today are the Euro Odd. Up to the upside. Very wicky, that. Don't like the look of that at all. Euro CAD as well. I'm short on this already at the moment. Had to do some drawdown control on this already. This Euro absolutely flying, or was yeah, starting to undo a little bit now. But Canadian dollar, obviously, and US dollar dropping a little bit today, so that Euro CAD's getting an extra little pop. So good looking short opportunity there. We've got 2 solid days of buying to undo on that, but not letting up at the moment. Euro New Zealand also extended to the upside. Again, that's pretty much the same as the Aussie New Zealand. So good looking short opportunity there. Just had a reverse alert on M5. Not quite actually, because that's quite a big strong push up. So reversal's going to come in here in a minute. Might get a little push up into that propulsion and then come back down again from there. And pound New Zealand also extended. Again, pound New Zealand had to do some drawdown control on this one as well when you load. So 2 DD controls had to be done on that one. Sorry, 3 on that one today. Stuck in these pounds. These pounds are absolutely parabolic at the moment, especially now, obviously, with that New Zealand dollar weakness. This one specifically, that New Zealand dollar weakness, and the pound was already powering up. So this thing, like 4 days now, 1, 2, 3, yeah, 4 days straight up. That's an ADR hit to the upside. Very exhausted. Hourly RSI extended and embedded. You've got a 4-hour RSI extension above the 80 level. And these 80 level RSI extensions, when you get above them, it's very rare for you not to get a pullback. One there, one there, one there. We're here. Yeah, look at that parabolic move. I mean, it hasn't really profit taken on that move, which was those 2 solid weeks. Then we had last week parabolic New Zealand dollar weakened at the same time as the pound strengthened. And now we're up here. So we're just pushing out above that high. Big pullback into that propulsion gap, I think, on this one. So holding this, I've done some DD control on it, so I need to hold it for a bit. But just starting to reverse now, look. So there's your 5-minute reversal alert, just gone in at ADR. So we'll see if that one comes down today. So the pound CPI is on Wednesday. So market's going to be moving into moves on this, getting ready for this number to come out. If that comes out as a 1.9, we will get a decent move on that pound. Bailey, well, not so much Bailey, but other members of the Bank of England have said that they are anticipating a bounce on inflation, and for inflation to hold above 2% for the rest of this year. If we get that 1.9 CPI year on year, that proves them wrong. There is nothing Bailey can do, and them also, but drop that rate. Yeah, August, 2 weeks' time. There. Where is it? There. Yeah, 1st of August will be the rate drop. So the market will want to start factoring that in, which should hopefully start a bearish move, but we need to wait for that Wednesday CPI number. That will tell us what's going on. Right, NASDAQ opening range is in. Nice clean opening range today, so I'll be taking a break of that one. Dow is trying to push again. S&P just broke long, didn't really get any further though. So again, really big divergence on these indices at the minute. Look, NASDAQ coming down, S&P sideways, Dow bullish, all over the place. Market really all over the place at the moment, coming to earnings. So massive opening range on the Dow there. We put in 108. So that's a third, just over a third of an ADR in that 5-minute opening range. Big, big, big candle. So you won't be taking an opening range break on that. It's too big. We'll come back to that in a minute. Just see what the DAX is up to. So the DAX trying to drop a little bit further. Fine, I'll let that do that. So no more movement there. Afternoon, church. For now, the pound is pushing. Feels like the market is expecting a rate increase instead of a drop. It's not getting that. Well, put it this way. If they do increase interest rates for any reason, after hitting the target of 2%, in which they said categorically in writing to everybody that when they get there, they will drop that rate. If for any reason they suddenly have moved to Australia and dropping the rate means putting it up when you hit your target, fine. Otherwise, that's coming down. Because if they do not drop that, that is going to overshoot. If that overshoots, we are going into a recession. So that has got to come down. Look at our GDP. Our GDP is flying. That has got to come down. Our unemployment is pretty stable. That has got to come down. That's at target. That has got to come down. Every single fundamental you get taught in economics tells you that is coming down. Why on earth somebody would come out from the Bank of England and say, yeah, I know we hit the target, but it might hover around there, you know. It's just lunacy. But the market at the moment is rallying the pound. Well, pound New Zealand's a bad example because that's the New Zealand dollar interest rate freeze, which obviously rallied it, dropped it like crazy, because obviously that's what we do when we don't change our rates. It makes our currency much, much, much weaker. Just nuts at the minute. The whole market is nuts. A little bit like the S&P 500 going parabolic in lockdown. Yeah, when all the companies are shut, no one's making any money. Stock prices go through the roof. Hang on a minute, you're not making any money. Yeah, we're getting more valuable. No, you're not. What comes after weird price action like that? Complete collapse. So all these pound pairs at the moment, market rallying like crazy on them. But the reason for this is because they were expecting, I think, an interest rate drop in July, or at least some guidance from Bailey to say, yeah, can't quite do it yet, guys, but we've hit target. It'll definitely be August. So they've been piling into staying sideways and dropping the pound. They were told there, hang on a minute, that's not happening. Bang, off we go. Not there, I guess that's a Swiss rate, but you know, the market is rallying because its anticipated move, which was an interest rate drop, hasn't been given to them. So for the moment, that's what happens. There's nothing you can do about it. You know, it's one of those things at the moment where you just have to sit through it and wait for them to confirm it. But we've got no Bailey speaking. We've got no confirmations from the Bank of England anywhere. So that is our unwritten confirmation from Bailey. If that happens on Wednesday, that's our unwritten confirmation from Bailey that that's coming down, because he said if we hit that, we will drop rates. If we exceed that, you cannot not drop rates unless there's something weird going on that you are not telling us. They blamed it on services CPI not being quite where they want it to be. Fine. But everything else is hit. They're changing the goalposts, basically, aren't they? There's nothing you can do. If you're the wrong way when they change the goalposts, you're the wrong way. What happens? Right. So I'm going to run through all the pairs today in a little bit more detail. So those are your ADR hits today. RSIs, obviously, I'm not going to go through all of them individually. Pound New Zealand is the biggest hourly extension we've got at the moment, above the 70 level. It is above 75, actually. It's just above the 75 level. So again, parabolic. We should be getting a nice pullback on that one shortly. Let me just quickly check the indices before I do that. Oh my God, look at this thing. So NASDAQ now broken long. Dow going the other way. Talk about a schizophrenic market. I'm just going to move target down below yesterday's high on the S&P. So this is Friday's high, which is also the high of last week, which is the double top. So if we hit that level, we're likely to get limit orders triggering at that level. So I want to have my target lower than that if we get there. NASDAQ, same, just moving it down shy of yesterday's high, which is about 2R probably. Yeah, 2R to the upside on the Dow, on the NASDAQ. Dow looks like it's going to hedge. So the Dow is not able to break Friday's high. We had one attempt at it during Globex. They've just had a run at it during the open. Too many limit orders at the highs. So not able to get through there. So that looks like it's coming down. And now so do the rest of them. Really weird open. But we'll see where we go. Come back to that in a minute. Pound US dollar, pound CAD. Yep, going up. Somebody messaged me in Telegram this morning. No, last night, actually. Just asking, last night during the football as well. Obviously not an English football fan. But messaged me last night saying, what impact is the US dollar, is Trump's assassination attempt going to have on the US dollar? And I basically said, no idea. And, you know, we were having a discussion about it. And it's, again, I hate to use this word, but it is an unprecedented event. When was the last time we had an assassination attempt on a ex-president or president? Ronald Reagan. Yeah, I was a kid. I haven't traded through an assassination attempt before. Nobody else has either, really. Electronically, anyway, because we didn't have electronic trading the last time this happened. So what impact's it going to have on the market? No idea. Never happened. So pound CAD and pound US dollar both rallying at the moment because of the pound strength on the back of the not really dropping interest rates or talking about dropping interest rates when we hit target. US dollar dropping at the moment because we don't know what the hell is going to happen with what's going on. When Trump comes out at his next Wisconsin rally, he will either be, right, everybody pick up arms, we're going to have a fight, US dollar is going to collapse through the floor and never come back, or he's going to be, everybody calm down, they missed, let me take over the country. And what is going to happen to that is it's going to rally the US dollar, because what happened last time Trump was in power, the economy went through the roof. So if Trump is now the forerunner, the economy is going to go through the roof again. That's what everyone would expect, which means the US dollar is going to rally. But we'll have to wait and see. So at the moment, your pound CAD and your pound US are obviously pumping because world events have changed. And that's what happens. This is why you pay attention to this sort of stuff. But equally, it can only move a certain amount before it has to pull back, because there's only so much movement the market can make, because you just run out of people that are willing to go the other way. And that's when the profit take move starts. So we should get a pullback on these this week, but as I say, probably Wednesday. Unless something else happens with Trump, you know. So, but yeah, Wednesday, I would imagine, is when we're going to get the move on these, which is going to be your CPI numbers coming out. And if those CPI numbers go up, heaven forbid, because the pound's probably going to rally off the back of that. But then again, look at the New Zealand dollar. Yeah. That's what happens when you don't change interest rates. So if our CPI number goes up, meaning it should be bullish, it could well just bring the pound crashing down. At the moment, this thing doesn't seem to be paying attention. Nothing seems to be paying attention much to normal fundamental movement, does it? So we'll have to wait and see. Right. Yens, I'm going to cover the yens first of all. What? This is a lovely day, isn't it? Right, hedged on all three indices. Well, I'm not hedged on the Dow yet, but I'm going to hedge on the Dow as well. God, lose the football. Someone nearly gets shot. 5 hedges. 5 out of 5 today. Yeah, I got hedged on the DAX, got hedged on the FTSE. Now I'm hedged on all 3 US indices. Good day. You get them. They always come along in a group, which is good. Let's get them all out of the way this week. The rest of the week we'll have clean breaks. So DAX coming down as well. I'm tempted to get out of this DAX. We're at 5R on the DAX. Just shy. What should I do with that? There's not much support here. Basically reacting off this level here. So I'm just going to close the shorts on the DAX. Okay, so looking for an aggressive hedge exit. There you go, hedged on the Dow as well. Let me just put targets in place on these in case it does go stupid crazy today. Oh, what a whipsaw. Look at this. This is the problem with the earnings fortnight at the moment. Earnings fortnight at the moment does not seem to have any volume. Weird. Used to be when you get earnings fortnight, the market goes crazy, goes parabolic because everybody's buying stocks like crazy. Doesn't seem to be working that way at the moment. What seems to be at the moment is just a load of volume, but no directional bias whatsoever, which is not usual. But hey, you have to deal with the cards you get. So upside on the NASDAQ, I'm going to go for yesterday's high. Downside on the NASDAQ is ADR, which is fine. That's down at these lows. Dow, downside on the Dow will be ADR, which is just above the propulsion gap that we retested on Friday. Upside target on the Dow is basically we're all-time high. So difficult one to pick. I might just leave it at 5R and just see what happens with price today. Downside target on the S&P, that wick on Friday, just before the propulsion gap, which is almost at ADR as well. So that's a decent downside target. Upside is going to be a breakout, isn't it, into all-time highs. So if it does break out into all-time highs, it's likely to get some momentum. So I'm going to leave that at 5R. So if we break out and we run, we'll probably hit 125 ADR or so, but at the minute it's just a whipsaw, total whipsaw at the open. Awful. Right, there we go. Feels like an unprecedented times. Yes, it does. I hate using that term because it always sounds like a cop-out, doesn't it? It's what our government said to us constantly throughout COVID. This is unprecedented. This is unprecedented. We don't know what to do. We're going to get out. So yeah, if anything goes wrong, it's not our fault. It's unprecedented. That's why I hate using it, because it sounds like the ultimate cop-out, doesn't it? Oh, I lost a load of money because it's unprecedented. No, I lost a load of money because it just went wrong. That's what I'd rather say, because you can't blame something on something you've never done before. What unprecedented means is it's a situation that's never occurred, which means you don't know what is going to happen because there's no precedent for it. All we have in trading is back. We can only look back. We can never look forward. So you can't see where price is ever going to go. But there are certain things that happen in these markets where you know something is likely to happen because it's happened before. When you get something like an assassination attempt on a US president, especially one like Donald Trump, who can move the market by tweeting or Xing now. Doesn't sound right, does it? There could be a massive move this week on it based on that. So we'll just have to wait and see what happens, basically. As always, deal with the situation you get given, not trying to predict it. So US dollar yen, second intervention at the moment is holding. So we had the intervention move last week. I'm going to go through all the yens in one go again as usual, because obviously the yen is a beast of its own at the moment. So we had the intervention move last Thursday. We had a second large order go in Friday morning during the Asian session, and then we had another one go in during the US session on Friday. So that is your sort of second leg. We did run straight into limit orders at the lows, which have been bought up. And so far today, there is no movement. So we need to see if this second intervention is going to hold. The last one didn't. So is this one the one that holds? So what we need is loads of negative news from the US dollar, or loads of Powell coming out at 5 o'clock today. Is 5 o'clock, whenever it is he's scheduled to speak? Yeah, 5 o'clock. We need Powell coming out and saying, you know what? We're going to do 2 interest rate drops this year. Yeah, so that will massively help the valuation of the US dollar, which will mean that that yen will be able to power up. If we get a load of bull news coming out of the US, it's going to go the opposite way. And then we need to wait and see what happens with their second attempt, or third attempt in this case now, at an intervention. So all the yen pairs, it's very, very hard to hit the long button, hit the buy button on them. That's what you should be doing for a carry trade to make money. But it's very hard to do when the Japanese are doing things like this. So that is where I would look. If we can get a pullback, 200 ADR to the upside for any reason, that is where I would look to pile into a short. Exactly the same play as I did last time. Shorted 50% and got that. I'm not sure this time we're going to get it. So key levels on the US dollar yen to watch are obviously the high of Friday, which is 125 ADR up there. That gives you a reversal as well, which is bullish. And obviously looking for a retracement of roughly 50% of the leg. It's a bit more actually, back up into that previous support, which got bought up twice. They slammed through that. But equally a 50% retracement on the move, roughly somewhere about 175 ADR. Never going to be exact, but any kind of move like that would potentially be a really nice multi-month hold move. But it all depends what happens with Trump. And it all depends whether or not this intervention holds, whether or not the banks and institutions look at it this time and go, do you know what? Yeah, we shouldn't be selling the yen anymore. But we'll have to wait and see. So the new intervention level turned out to be about 162, which is bang in between the 161 to 163 that Goldman called. So this was their new high estimates, 161 to 163, which is the lines I've got on the chart. And that's where we got it. So yeah, interesting. See what happens with them. So with all the yens, basically, if we get that yen starting to power up, all the yens are going to do the same thing. So New Zealand dollar yen, obviously we got a move down on that one. New Zealand dollar weakened before that with the interest rate change, and now we've had the intervention move. So we know this one's very, very weak at the moment. Same with the pound. A lot less weakness on the pound. If you look at the move that got put in on the pound, that was 430 pips off a 170 ADR, so roughly 3 ADR there. We got much more than that on the US. But, you know, this pound is not giving up at the moment. So this one's probably the one that's most likely to get that retracement. But the US is the one that we're interested in because that's the one that the Japanese are watching. Euro obviously came down as well. All of them attempted to break that low last week. None of them got through it. So we know that there are buyers in this market trying to hop on this in exactly the same way as they did with the previous intervention. Yeah, that is the first intervention. The second intervention broke that level but pulled straight back into that low. We then got through it and then we rallied for 6 weeks, 8 weeks. Yeah, so they're buying it here and trying to drive the yen further down. So it's going to take the Japanese to do that, or it's going to take the US to drop to get this yen moving. So we'll have to wait and see what happens with this one. But so far it's absolutely stalled out today. So no further movement today, which you kind of expect. It's a bank holiday in Japan. So there's no movement going on in the banks, which is fine. So it's sitting there in shock after 2 days worth of intervention moves. So again, what's going to happen with it? Don't know, don't care, not trading it, not interested in the yen. It's just too unpredictable at the moment, which brings me nicely onto the Swiss Franc, my other friend that is completely unpredictable because they just keep changing their interest rates without telling anybody. So at the moment, I'm leaving the Swiss alone as well because we're not getting any kind of news out of the Swiss National Bank as to what they're doing. So leaving it for the minute and waiting to see what they do with these interest rates. So if you look at the interest rate changes on the SMB, we've had 2 unexpected interest rate changes. So we're way below inflation target, and it's still coming down. They have to drop these rates, which would indicate that you want to be buying everything against the Swiss franc. So that is the expected move, is to buy the pullbacks on the Swissy. That is what you should be looking at. However, we know, because it's a safe haven currency, something goes wrong anywhere in the world, they buy the crap out of the Swiss. All the money gets put into the Swiss franc as a safe haven. So the fundamentals say you should be doing that. The problems we've got going on in the world at the moment, exacerbated this weekend, says you should be doing that. So if the fundamentals are saying that, and world economics, world events are saying that, you just don't know what to do, which makes it completely unpredictable. So it's absolutely fine to trade anything Swiss franc with a stop loss, because your downside risk is limited. Position trading wise, it's just not very good to trade at the moment. It's not very safe, because it could go absolutely anywhere for any length of time, either caused by the SNB changing interest rates without telling us, by something like an assassination attempt, or by intervention on behalf of the Swiss. So the Swiss National Bank and Jordan came out for the first time ever, as far as I'm aware, and said, when they change their interest rates, we will happily intervene in this market, either to rally the Swiss or to dump the Swiss at our convenience, and we won't be telling you about it. Which means that moves like that can kick off at any time, because Jordan just fancies doing it. So this thing's like a ticking time bomb, a little bit like the yen at the moment. Very, very hard to read. As you can see, not a lot of movement anywhere, because market's not really interested in trying to guess what to do with this either, because you just can't tell. But overall, you will find longs will probably work better than shorts, but it's grinding. So don't be surprised if you have to sit through it for a week or so on end, waiting for that little couple of days of ADR and moving like that. Yeah, so very tricky situation with the Swiss, all of them. New Zealand Swiss obviously is bearish at the moment based on the New Zealand stuff going on, but we're pulling back straight into a propulsion gap, which is holding as well. So you're stuck between a rock and a hard place on this one at the minute. Probably going to do that for the next week, isn't it? So yeah, and obviously US dollar Swiss, no idea what's going on with the US at the minute. Very difficult to tell what's going on with anything at the moment, isn't it? It's just one of those situations where everything is completely volatile and unpredictable. So Swiss and the yen, basically, we're literally waiting for, can they or can't they with the Japanese. With the Swiss, we're waiting for, will they or won't they, at any point. So those two are kind of off the table really for position trading at the moment. Aussie dollar pairs, so there's no bearishness on the Aussie at the moment. The interest rates are where they don't want them. Inflation is definitely where they don't want it. It is coming down at a decent rate, but I suspect we're going to need to wait for a much bigger drop in inflation before they start to press the button. They have indicated a possible interest rate rise, one more. So has New Zealand. They didn't do it. They decided not to. The Aussies may or may not decide not to either. So we've got the Canadian dollar here dropping rates. We've got the Aussie not dropping rates. So this is definitely going to be easier to buy than sell, but it's moving very nicely up and down all the time at the minute. So not great movement, but so I'm trading it in both directions at the moment, just waiting for some downward momentum on it really. So got a couple of sells on from the RSI extension last week. We've had another RSI extension today. So got a little bit of bearish divergence showing at the moment, looking for a bit of a pullback on that. Need to put some TPs on that. Let's go for an ADR on it in a minute. Aussie dollar, New Zealand dollar. So again, this one, it's going into another parabolic run, a little bit like it did before where I had to cut it. It's not stopping. That was completely unexpected, drop in the New Zealand dollar off the interest rate freeze. No reason for it. And I've already kind of been through this one when we looked at the ADRs. We're breaking out into new highs, which it is off the back of a kind of 1, 2, 3, 4, 5-week parabolic run. So this thing hasn't stopped for 5 weeks straight. Yeah. It's just very, very unusual to get that sort of movement unless you got something changed. That is an interest rate change. So, what was that? Yeah, that was the interest rate when the interest rate started to change there. So normally, as you can see, 4 weeks up, 3 weeks up is fairly typical, and then you get that week's worth of pullback. 3 or 4 weeks down, you get a move opposite direction. 3 or 4 weeks up, pullback. Yeah. You get the odd instance where you go a little bit further, then you get the pullback. That's where it caught me out. Came out 2 weeks later. So definitely looking like a short at the moment. No way it's getting all the way up to there without interest rate change, obviously. If the Aussies put their interest rates up and the New Zealanders drop them for any reason, yes, you're up there. You're not going to stop. Get out, basically. But unlikely to happen. So we're week 5 now. As you can see, we have tried to break last week's high today. We didn't manage. So market is pulling back inside last week's high. You've just had a reversal alert on the hourly. So this could be the start of the pullback into that level there. So looking good for shorts, Aussie, New Zealand, extended at the moment. Aussie dollar, US dollar. Again, I've got 3 on this one. I've got a double entry on it, annoyingly, where the power cut screwed my terminal up. So I got a double initial entry, so I'm overextended on these a little bit too much at the moment. But as you can see, target's down there, looking for a retest of the highs there, probably those highs there, but looking for it to push into this propulsion gap. I'm targeting this area here because that's where we bought from last time. So looking for it to unwind a little bit on its way. But obviously, that is the key here. We don't know what's going to happen to that. There's no news on the Australian dollar, really, that's going to impact us this week. We've got New Zealand, haven't we? CPI for New Zealand will impact the Aussie. Oh, yeah, sorry, we have got the unemployment rate for the Aussie. Tell a lie. Which is forecast to go up. Yeah, so drop in Aussie is forecast. So we'll see what happens. Any bullishness in the US, i.e. Trump's coming back into power, sounds like the US dollar and the economy is going to do well, and unemployment going up in Australia, you find yourself down here in 24 hours. So just holding on to that at the moment. Got three positions on, or should be 3 positions on. Averages within ADR, so just waiting for a pullback, basically, on that leg. Covered euros. So euro at the moment is bearish fundamentally. So we've got the interest rate drop from Lagarde. The next interest rates obviously coming out this week, forecast to be a freeze. So the inflation is still coming down. There's absolutely no reason why they shouldn't freeze interest rates this month. It looks to me like the right thing to do, unlike the pound. But anyway, so yeah, we got Lagarde speaking obviously in the press conference after the ECB rate announcement. So we get the rate announcement at 1:15. Half an hour later, we get the press conference where Barrier Man comes in. We'll see Barrier Man on Thursday. There he is. He's the man that moves the barriers for Lagarde, just in case somebody wants to go and poke her with a pencil or something. I don't know. Anyway, Secret Service. Good at their jobs. So yeah, so that's coming up this week. As you can see, not a lot of movement on the euro odd at the minute. So I'm taking euros short only at the moment. So I'm looking for pushes up above ADR, RSI extensions to the upside, short orders, basically. As you can see on the euro odd, the last short was there. Haven't had one since. Yeah, so it just hasn't given us an entry. It's been contracted as hell. We've had some downward movement, but on very low strength, very low volume. Just hasn't had any opportunities to get in. So Euro CAD in shorts on this one at the moment. Canadian dollar dropped interest rates. Euro dropped interest rates. So this looks to me at the moment, based on we've got this US dollar weakness coming in, this is kind of pushing up. It looks like it's going to go and attempt the previous month's high, in which case we should hopefully find some limit orders triggering at that level. Failing that, that is your next high there, which is a fair old distance away. So I've got shorts on at the moment. The only thing that's going to happen that would potentially shock the market for the euro this week is Lagarde to come out and say, do you know what, we're going to go to 4, in which case then the euro's coming down anyway. So I can't see her coming out with anything bullish in the press conference. There's not really anything, I don't think, that she should say that's bullish, but anyway, we'll see. So we're coming off the back of a very strong run. I'm just looking for the pullback in this, but we should be ideally starting to put in lower highs now, or at least forming a range. So this could now be the new range low here. And this could be forming our new range high up here. So selling somewhere up in this area, looking for it to come back down to this area. Obviously, the Canadian dollar is bearish because it's dropped rates. Euro is bearish because it's dropped rates. A bear against a bear is a range. So there's no fundamental bias for a massive long or a massive short on this at all. So in theory, you could trade it in both directions, but I'm short only at the moment. We're above 80 on RSI on the hourly. Yeah, so we're looking for that kind of move. You can't see that's behind my head, but you can. It's just above my head. There's an RSI extension above 80 there. Yeah, so when we get above the 80 level, big, strong signal for shorts. On the 4 hour. Hourly, we got extended again on Friday. But yeah, it's just grinding at the moment. Euro pound. So this one's been caught offside a little bit because obviously we've got the euro weakness and suddenly all that pound strength has come in. So for the last week and a half, we've had some decent moves to the downside on this. Fundamentally, there's no reason for this one to really go very far. It's doing exactly the same as it's done on the last 2 trades. You can see the last 2 trades on my chart here. The last 2 longs I took. Yeah. Needed 3 or 4 positions, waiting for weeks in it. Got in there, needed 3 or 4 positions, waiting for weeks on it. In here at the moment, got 2 on. We are down at the lows, and it does seem to be holding these lows at the moment, so I'm hoping for a push up into propulsion. I need to adjust my targets on this while I'm here. So yeah, push up into propulsion would be good. But yeah, it's the euro pound is the lowest ADR we've got. Very contracted pair, doesn't move very much, and it takes ages to move. There's no reason we want to be moving up or down on this because euro and pound are close trade partners. So I can see this kind of, as soon as we get some news bearish on the pound, which we're waiting for, just coming back up, potentially into the 24.72 to continue the downtrend. But either way, it should be pushing up at some point very soon. Euro New Zealand. New Zealand dollar screwed this one on interest rates. So big extension on the hourly again for a short. I'm trading euro odd, and that hasn't given me a signal. I'm not trading euro New Zealand. I don't trade both. Aussie and New Zealand move closely together. So, but there's a lovely entry there today. So you've got an H1 RSI extension. You've got a 125 ADR hit to the upside on it. You've had a 5-minute reverse alert, and you've had a 15-minute reverse alert. Oh, not quite. No, you haven't had a 15. Just holding that. So as soon as that breaks that low there, there's your 15-minute reversal short as well. So really nice looking short opportunity on that one right now. Looking for a push back into propulsion into these highs. So it's this area here. Basically, we're looking to come and retest. So if this is a breakout, which is going to hold and then push, that's where you'll be pulling back into. However, Euro's dropping its interest rates. New Zealand is not dropping its interest rates. I don't think that New Zealand dollar weakness that we got previously on the interest rate freeze is correct. I think that'll probably undo, in which case we're looking for a downward move. So this is actually a pullback, 61.8 on this leg. That's the more likely outcome from the fundamentals and the directional bias that should be happening with these two. So great looking short. Obviously would never hold it for 4, 5, 6 weeks as long as it needs to get down to a new low. And that was what, 1, 2, 3, 4, 5, 6, 7 weeks that took. There's no way I'm holding anything for that long, but if you wanted to swing trade, that's your swing high. So you got your high, your low. You're going to put a lower high in before you put a lower low. Euro US, we're right up at the highs. So we've rejected this one today. I'm short on this with 3 positions at the moment. Done a couple of DD controls. Average is 125 ADR, which is fine. So just looking for this to come down. So difficult to tell what is happening with this US dollar right now. As you can see, Euro US dollar totally sideways. We're just coming up into range highs at the moment. So we sold that propulsion gap twice, 3 times. Yeah, lower high put in, another lower high put in. We're double topping that high at the moment. We've had a 2-week, or rather 2.5 week propulsion move to the upside. Thing needs a little bit of a rest. So very extended. So be looking for a pullback. It's either going to put in a new high and then pull back, or we're going to double top there and pull back and then either go like that or like that. But either way, it's going to be either that scenario or that scenario. So it's either going to turn from this double top, and it's a short right now, or it's going to turn out that propulsion. One or the other. That's 225 ADR away, which means I'll have to scale out a bit more. But that's kind of what that one is at the moment. Again, I'm looking short only on the euro at the minute. Obviously, if something catastrophic happens and they dump that US dollar for any reason, nothing you can do with it, is there? There's no reason why they should. However, we've had talk of September interest rate cuts again from certain institutions. Yeah, Fed have said it's going to be January next year. Other people are saying it's going to be September. There's a big difference. I'm going with what the Fed says. The Fed haven't said anything about September drop yet, but they are kind of discussing now. So, this situation with all of these currencies, with these interest rates and these CPI numbers, is changing almost on a weekly basis at the moment. 1 week we're bullish. Next week they come out and say we're bearish. Then they say we're bearish again. Halfway through the week they change their mind. Yeah. Impossible for the market to predict any direction on anything at the minute. Everything is just all over the gap. So we know limit orders trigger at highs. So if we do get strong selling at that level, the bulls will go, let's get out, and they will turn into bears, and that will just collapse down very, very quickly, very much like we did before. So euro US dollar, I'm short. Pound, again, pound waiting for Bailey. We've had nothing out of Bailey now for 4 weeks. I don't. Last week, wasn't it? Nothing was said though. No, he didn't. Did he not speak? I can't remember. Either nothing was said or he didn't speak. We've had nothing out of Bailey at all. So we're waiting for some guidance. This is basically, if he's not going to give us any information, we're going to have to go with the numbers. And if the numbers come out as bearish, the market, I think, is going to react hard to it. So I have no problem being short on the pound. I just wish Bailey would come out and help it along its way a little bit. So we should be looking for lower highs on pound pairs because we're going to be dropping interest rates. If they don't for any reason, fundamentals are out the window, economics have changed, and we might as well scrap fundamentals, because if you hit your target and you drop interest rates historically for the last 200 years, when you do that and suddenly you decide we're not going to do that anymore, what's the point in having them? Yeah. You've told us it's coming down at 2%. We're at 2%. Bring it down. Just not happening at the minute for some reason. So, yes, we're worried about services inflation, but anyway, that is your previous support, which we broke with that propulsion move, retested it, added into the shorts. Bang, exactly where we are now. So good looking short area. Pound CAD, again, extended. US dollar weakening, CAD weakens with it. Nothing I can do about this. We've had a news event go against the position. We've had a parabolic move on the pound at the same time as we've had weakness in the Canadian and the US. This thing's just completely caught on the wrong side of all news events. Had to scale out of a load of it. So I've been in this now since May on the shorts. Had to scale out of a load of it there. Made some nice profit here. Did a little bit of drawdown control. and got out of that part of the position. Re-entered here, got out of that trade there, in again from here, and again just starting to scale out. So the moves on this are just not going the way that we're expecting it to do with interest rates. So nothing you can do, and the movement is just so strong on this pound. They are just, look at it, and it's last 2 days basically is what's killed this trade. It's just not stopping for 2 days, still going. So we have got a lot of bearish divergence on it, multiple bearish divergences, but you know, there just doesn't seem to be any let up in this pound movement at the minute. So bulls fully in control of the pound right now, but are they rallying straight into the drop on Wednesday, which would make total sense? Keep going. Let's squeeze everybody as much as we can who's short, get as many of those shorts out as we can before we take profit, because there's going to be plenty of bulls around. So yeah, that looks like what to me is what's happening at the moment. So we're just waiting basically for Wednesday. Hopefully then we get that negative 1.9 and then off we go. So we'll see what happens with that. But if you look at the CPI numbers, obviously 1.9 is quite a big move. So we may get it, we may not, but we are getting unexpected numbers constantly. We are not getting these forecasts right at all. Last time we did, first time, but you know, the numbers are very, very unpredictable at the minute. So we'll wait and see what happens with that on Wednesday. But pound pairs should all be bullish, bearish rather. So regardless of whether we get a 1.9 or a 2, we've hit target. Yeah. If we get a 2.1, that's a different story. But we're not going to increase interest rates. We're just going to not drop them. Yeah. So it's still not massively bullish, is it? But we'll wait and see what the market makes of it. Pound Swiss covered. Pound New Zealand rallying again. Caught in the pound. Caught on news that's gone against me on the New Zealand dollar for no reason. Stuck. So just waiting for the drop on this one. So looking for shorts on the pound pairs. We've just broken out of that high. So next high we've got coming up is basically 175 ADR. And then we're all the way up to that previous high, which is the high from back in August last year. So this is the 12-month high. But not really pulled back properly on that leg, and that leg obviously is completely parabolic. So after a parabolic move comes an exhaustion. Yeah. So that's what we'd be looking for. So if you look at the last parabolic move we had on news, which was there, that was your pullback. So if you class it that low as being there, you'd be looking for pullback basically into that before we put a new leg in on the way up to there. However, Bailey says, go, we're off. And you're going to be back down here within a month or so. Yeah. Bailey says, we're dropping. That's what we should be expecting. Shouldn't stop. So if you're hemorrhaging on drawdown control on these at the moment, you need to try and hold them. It's hard, but you need to try and hold them to the targets because there's a good chance they will hit them if we get that interest rate drop announced. Pound US, same situation as the Euro US. Yeah, got weak US dollar, and we've got parabolic moves on the pound going on at the moment. We've broken out highs on this. I'm on aggressive drawdown control now on this. As you can see, I've got a stop loss in place. So I've got an aggressive drawdown control trade triggered today. Average is ADR. So I'm literally looking for a 1 ADR down day after this multi-week parabolic move. We've literally had one down day which didn't manage to break the lows in 2 weeks. Yeah, absolutely exhausted. Yeah, so I'm looking for basically a down day, an ADR down day. That's it. So as soon as they start to unwind these pound positions, everybody will see the same thing happening at the same time. The longs will flip short. They will take profit and we'll get that lovely drop for a couple of days. But we're just waiting. And again, no news from anybody in Bank of England. and the US obviously got a few things going on at the moment. So we'll wait and see. But yeah, I have no problem with it. And again, getting into aggressive drawdown control positions now. So getting to the point where need it to start to think about coming down. Aggressive drawdown control is fantastic, and you can make a lot of money very, very quickly. You can also hemorrhage a lot, but you only take aggressive drawdown control positions after you are very squeezed, like this one is at the moment. Unfortunately, again, one of those double entries I had where the power cut happens. So I've actually hemorrhaged roughly 1.5% on this that I shouldn't have, because I shouldn't have two positions on there, but I have. So New Zealand dollar CAD, last signal long on that one was last week. Again, no real reason for this New Zealand move. So we've actually undone it on the Canadian dollar. So longs or shorts on this, just waiting for a signal in either direction. I don't think there's any reason we should be looking at weakness in the New Zealand dollar, but we'll wait and see what the market makes of it. Interest rates have not changed. The last move on no interest rate change was a weak New Zealand dollar. So we should be getting some strength coming through. They should start to unwind some of that movement now. But yeah, looking for moves basically up or down on this one. No extensions at the moment. There is a 4-hour RSI extension from Friday. If you got, actually, it wasn't Friday. That was a trade I took last week. That was Wednesday last week, which we got out of. So no entries on that one at the minute. Just waiting either direction. News-wise, obviously, we've got the Aussie dollar unemployment rate and we've got New Zealand CPI. So that quarterly figure is looking to ever so slightly drop, but we'll see. We'll have to wait. See, that could completely undo that New Zealand move. If we get a negative drop below 0.5 on the CPI for New Zealand, that rally we had not changing interest rates, that undo very, very quick. New Zealand US sideways at the minute. So again, we're stuck in a range at the moment. Not really going anywhere. So we're bang in the middle of the current range, highs and lows. Either way. Yeah. So New Zealand dollar, neutral, slightly bullish. US dollar, neutral, possibly bearish. Again, could change this week anytime, couldn't it? But yeah, so there is no real bias on it, which is why it's going up and down. So everything US dollar at the moment, I'm just trading long, short, long, short, long, short. Doesn't matter. The US dollar is going sideways. It's an election year. Until we get some confirmation of what's going on in the election, or we get something unprecedented happen like a CPI drop, it's just going to go sideways. So we're just waiting for signals. Had one long there, took it, brilliant. Had a short there, took it, brilliant. There was a long signal just about there. 3 positions out. So yeah, really easy to trade. Just waiting for signals. Same with the US dollar CAD. Just been milking this up, down, up, down, up, down. Every time it gets extended, it goes the other way. Brilliant. So slightly bigger drop than normal over the last couple of weeks and accumulated. So we look like we're pushing back up into there. Little bit of US dollar strength this week from news, or a little bit of Canadian dollar weakness off of the unemployment tomorrow. Sorry, the CPI tomorrow. Yeah, we'll be back up at these range highs. And we've got obviously range lows where we are at the moment. So more of a long than a short, but if it pushes up into there and it gets shorted, shouldn't need more than 2 to 3 entries. None of these trades on this over the last, until April this year, May, June, July, 3 months. There's been one trade there which needed 2 positions. There was one trade there which needed 2 positions, but every other trade has been a single, straight in, straight out. Really, really nice and easy to trade at the moment. So continue as that until we get something that tells us the other way. And there's no plans for that as far as I'm aware at the moment. So US dollar Swiss, we've kind of covered with the Swissies and the yens. So that's it. That's everything today. everything is in a mess at the minute. It's just painful watching these markets change their minds literally on a weekly basis. So what you're expecting to happen is not happening. What you're not expecting to happen is happening. So it's just impossible to really predict price movement. So it's a case of, at the moment, just having to hang on to everything. So, we know, there's not an economist on the planet at the moment that is not looking at this pound going, it's a short. Yeah. The interest rates are about to drop. Yeah. It's not dropping. Yeah. There's no economist on the planet at the moment that is knowing where the yen or the Swiss franc is going next. Every time the economists publish some information about what the US dollar is doing, they change their mind the next week because the Fed changed their mind every week. We've gone from summer to winter to next year back to autumn. Interest rates are just not predictable at the moment, and interest rates are the key driver for direction at the minute. So we just have to hold on tight and wait for some kind of indication from banks and institutions as to which way they're taking things. But moves like this are you just have to sit through and take the losses on them at the moment. So unfortunately, but it's a case of these sorts of times, and these are the sorts of things that backtests will never be able to do for you. Times like this, I will not be getting out with 0.5% profit on this. I will be getting out with more than 0.5% to pay for the drawdown. Yeah, so you kind of got to adapt to these situations and look at your P&L and go, right, I need to just get back to a break-even level. If you can survive these types of periods, you survive. That's it. Capital preservation, number one. That's the only thing that's important, because if you haven't got the capital, you can't trade. So you've got to kind of balance the books when things like this happen and hold on to positions a little bit longer to get that little bit extra out of them. ADR Euro CAD 125, more movement to the downside on that Canadian dollar. Somebody knows something we don't know about the CPI number potentially tomorrow. So CPI tomorrow, that's 0.5%. Basically, they're looking for that to come down month on month. That's a big drop. So if we do get that, yeah, we're going to get another drop on the interest rates, aren't we? But look at the yearly figures. Not forecast a lot. We're looking at a 0.1 differential. Remember what happens when we got a 0.1 differential on the US dollar? Collapse, undo, V-shaped recovery. At the moment, we've got a push up on the Euro CAD because we're getting that move. We're likely to get that as well because the forecast is only for a 0.1. If we get the 0.1, doesn't mean they're dropping interest rates. They're still miles away from hitting that 2% target. Yeah, so all this movement is very short term, but very strong. I keep talking about these trading conditions and how they are so different to norms. Market structure, I call myself the market structure trader because that's what the market does. It moves in waves and profit takes. At the moment, that is not normal. Yeah, that's what we're getting. We're not getting market structure. We're getting panic, sit around, wait for some kind of indication as to do something. It's almost like you're playing hide and seek in the dark with somebody with a knife. Yeah, they're chasing you around the house. You stay still. You hear a noise over there, so you run that way. Then you stop again. You hear a noise over that way, you run, you stop again. Yeah, not normal movement. That's what we used to seeing. What we're getting at the moment is just freezes. And these ADR numbers, which are just useless to anybody, aren't they? We've still just got that. We've got those two. So the ADR on the pound yen's picking up. Look. So the yen, we're starting to pick up. We've got 100 on a few of these yens now. But that's because we had an intervention of 500%. 5 times the normal movement. That's why we've got an ADR of 100. But everything else, 30s, 40s, 40, 30, 30, yeah, 20. There's no movement. It's just no movement. So it's like panic, run, stop. Panic, run, stop. If you're the wrong side of it, you can't make money out of things like this. These sorts of movements. It's pure luck. There are prop firms all over the world right now blowing up on a weekly basis because if they flip the coin and it's gone the wrong way, you ain't got a hope in hell. There's just no structure. There is no indicators working. There are no levels working. There's nothing working. It's literally, did I guess right on that news event? Yes. Brilliant. Did I hold it long enough? No, because you got out and it went 3 times further than you're expecting it to, because it doesn't normally do that. Everything. Totally the opposite. Perfect analogy, yeah. Playing hide and seek with somebody with a knife in the dark. I don't know where that came from, but it's what it is, isn't it? You're just waiting. And you move and then you stop. That's what it is. They're all doing it as well. It's just the market is like that. Look, just the Swissy, but the Swissy not so much. I mean, this is the thing with the Swissy, but look at this. Holy crap. You know, although this is an upward movement, yeah, it's not really, you know, moving, is it? It's more like grinding. And then we're stuck for a bit. Bit of a movement, stuck. Bit of a movement. Bit of an expansion in range. But, you know, look at these movements. This is a 35 ADR. From that high to that low there is 53. We've moved 1.5 ADR in a week and a half. 1.5 times the average daily range of the pair in a week and a half. That's not movement. That's, we slipped over the edge. Put it back. You can't trade on these things normally because they're just not far enough movement. By the time you get some kind of signal to get in, it hasn't moved far enough to get out again. You know, so this is why we seem to be sitting in trades for weeks on end, because it just doesn't move far enough. We get stuck sideways. Horrible. Just horrible. Look at it. Again, look, it's just, if you look at that whole period of time there, yeah, and then you look at that whole period of time there, ADR 113, high to low on that range, 138. It's an ADR. 1, 2, 3, 4, 5, 6 days. It didn't move for 6 days. Just popped up slightly under ADR, down, up, down. I mean, that day there, 54. Less than half an ADR movement in a day. It's just not, you know, you just have to look at the market at the moment and go, what the hell? This is just, you know, and you either going, I know, let's not change the interest rates on the New Zealand. Well, obviously it's going to collapse by 4 ADR if you don't change the rates, because that's never happened in the past. There's no way you can predict this stuff. You know, economists must be pulling their hair out at the moment. The only people making money in this market are the usual suspects, banks, because they're the guys that can move it. They can do this, and they will do this. And when they're ready, they will move it back. Like young kids playing football, yeah. We used to have a term when we were watching the kids. It's like they're like bumblebees. So they swarm around the ball. Really, really tight. No spreading out, no movement, just really tight. But you two, you're wingers. You don't go towards the ball. You stay out there so that they can pass it to you. Oh, they don't pass, do they, kids? Afternoon, AZ. Time to develop a scalping strategy. Yeah, and any scalping strategy will work at the moment because you're using fixed risk reward. Yeah. There is a really good scalping strategy on the website. It's called ADR reversals, Steve. Yeah. If you can find an ADR, this is the problem. Finding an ADR is kind of the trouble at the moment. That day there was probably the biggest day out of all of these days. That was 146. Yeah. So there you go. So you pushed up. You had an ADR reversal to the downside. You went long. Job done. That's not an ADR. That's not an ADR. That's an ADR. Absolutely no reason for it because they didn't change the interest rates, but bloody hell. It's just trying to find, you know, this is the problem with strategies, and this is why people system hop. Things change. Yeah, you got to adapt, But if you change your strategy and go, right, I'm going to be a scalper now, yeah, as soon as we start going to market structure trends, you're dead. Yeah, scalping works on 5-minute timeframes and 1-minute timeframes because you're trading algorithmic chop, which is a flip of a coin. In normal market conditions, it's a lot more difficult to trade. Right now, support resistance scalping. This is obviously not the right time to be showing it that, but support resistance scalping, brilliant. Yeah, take every reversal alert you find at the highs and the lows. You wouldn't have got one there, but you would have got in there, but you still made money out of it. But yeah, lovely. It's very difficult at the minute. I'm not the only person that's saying this. It's just the way it is. You have to just sit through it. This is just the longest period of nonsense I've ever sat through, which is worrying because eventually you get a new norm. And if this is the new norm, it is time to adapt. But by the time you've adapted, the new norm becomes the old norm and we get another new norm. Then you've got to adapt again. You're always one step behind. Scalping strategy, should you increase your risk as the movement is minimal? Yeah. And this is why scalping doesn't work for Guinea. Yeah. You can't scalp with small risk. Scalping is about getting in and out fast and making money with big risk and small movement. If you get caught the wrong side 5 times, you've lost 5% of your account. To get a 5R return on a scalp is hard, even on a scalp, because you're going to get chopped out a lot of the time. You're going to get stopped out constantly, which is why scalping is very difficult, because your stop losses will always get taken out the vast majority of the time. Very tricky. You get beaten up, but then you'll get days where you'll suddenly, it'll just get it right. It's a bit like the SIH or ORB strategy. That NASDAQ just missed me. Look. Should hit target on the NAS in a sec. I'm just going to watch this and get ready to close this out. But this is a prime example. Yeah. You know, this is 5-minute chop. Yeah. So all of this stuff, it doesn't matter. You didn't make any money there because whether you went long or short, you would have been stopped out on it. You went long, you got stopped out. So you went short, you're back at break even. You're sitting there doing nothing. Yeah. It's very difficult to make money as a scalper. I'm not very good at scalping, which is why I prefer SIH over ORB, because it drives me nuts getting stopped out over and over again. And it does with most people because we're not programmed to take loss. So you get more risk on to try and get back the loss you've made, which makes you lose more money. Very few people can do it very consistently, which is why you need automation, because automation does it all for you. I've told the EA to get me out there. Look at how close that is to getting my target, this NASDAQ. Yeah. There's my TP. So what do you do now? Yeah, you've got to have human intervention, even with automation. Yeah. I'm going to be watching this. If this paints now, we got 3 minutes left on this candle. It's probably going to hit target by the looks of things. But if this paints an inside bar here, I will close it, because if we've painted an inside bar, we're stopping. Yeah, bulls have run out of steam. Next thing bulls do, get out their trades. They can't go any higher. They can't make any more money. They'll look to hit the opposite button and they'll flip. Yeah, but you can't teach an EA to identify this, because it's also got to look at what's to the left. The only reason I've got my TPs here is because we're just shy yesterday's high. What do we find at yesterday's high? Limit orders. So this area here, I'm expecting sellers in. So if I hit target there and we hit that level and then the sellers hit, I'm going to get out nice and quick. That's the logical move. But you've got to adapt if it doesn't happen. Absolute candlestick double top. One minute 50. I've decided to put everything on button trading mode for a while so that there can be more. I can be more reactive to these gigantic moves. Yeah, not a bad idea. RSI is, RSI has been my backbone for, I don't know how long, 6-7 years, and it's done me very, very, very well. Closing that. He says every time I say I'm closing that, the broker's listening in on my mic. Push it up a little bit. RSI is not as effective this year by a long shot as it has been, for the past sort of decade or so, because the relative strength isn't there at the minute. We've seen these ADR contractions lower than we've ever seen. Yeah. So the moves that you get, the statistics. I'm sorry, I'm just watching. What the hell? Sorry, I'm just waiting for a class I'm trying to get onto this evening. I think that might be a reminder that there's a space come up. Probably not. Yes, there is. Excellent. Sorry. Back. 10 seconds to close of this candle. Really trying to get through that level. Closing out the longs. So yeah, RSI is just not as effective this year as it has been in the past, because the market is sitting around a lot longer, waiting for more information than it's needed before. Therefore, you're not getting those strong moves. When we get the strong moves with RSI, they're going way beyond ADR levels that we normally anticipate. So these statistics that I gathered here, this 225 ADR, this 175 ADR, the 6%, the 2%, that is normal market movement. When you get this sort of movement where we break out and we hit ADR, what we're seeing is we're seeing multiple above ADR moves back to back, which isn't normal. What we see normally is an ADR hit and a pullback, an ADR hit and a pullback, an ADR hit and a pullback. We're getting ADR flag, ADR flag, ADR flag, and then sit around and wait. That's what we're getting at the moment, which is not normal. Not the norm that we're used to, is it? So this is where it's becoming much more difficult. And I'm also becoming much less risk averse at the moment. I'm getting tighter and tighter and getting out of positions faster and faster at the moment when they're going wrong, because I'm seeing them just not stop. So got to be uber careful. Support resistance, playing these ranges that we are getting into, like the Aussie dollar, New Zealand dollar at the moment. Yeah. These range highs start, rather than using RSI to show you there's been a move, is using RSI to show you there's been a move, not getting in, but anticipating that we are going to reach for the next level. That, I think, is probably a better way to play at the moment. Obviously, with RSI, you're getting in because the indicator's got extended, but it's going further for longer now. So when you get an extension, are we at a resistance level? If yes, get in. If no, wait until we are, is probably the better thing to do, because you need a lot more to turn the market around at the moment, i.e. those limit orders sitting at those levels to help you in. And if those limit orders sitting at those levels don't help you, the next ones will do. Because if it slams through one of those levels without turning around, it's going to find an exhaustion point at some point, isn't it? But because we're not getting market structure on the way to the levels, we're getting parabolic moves. The RSI trigger is probably not the best thing in the world, or rather the RSI condition at the moment. It's probably not the best thing in the world to be using, is it? But saying that on things like US dollar CAD, it's absolute gold. Yeah, this thing has not made a losing trail or done one drawdown control in 4 months, 3 months. But look how it's reacting around the highs and the lows. Yeah. So that long that I got into there would have been better waiting for the reversal alert there at the weekly level and the monthly levels. And then if you get in, so rather than getting in there, you get in there. You wouldn't have had an extension. If you get in there, you know you haven't got far to go to get there, but it needs to be parabolic by the time you get in. Somebody used to say, you know, they used to come in the live room and watch me trading and say, wait until Lee's in 3 or 4 positions and then take it first. And in the past, that was always a really good strategy. You'd only get singles on. Well, hey, at the moment, it's probably, you're still going to have 3 or 4 on if you get in when I've got 3 or 4 on to start off with, because the reversals, the pullbacks, the profit takes are not happening at the moment, are they? They're just flagging them. It's almost as if there's little speculation in the bank's trades at the moment, and it's just made up more of commercial and hedge orders rather than speculative moves, because the speculative moves are the ones that tend to get undone. If you go and look at how FIB is operating at the moment, if there's any FIB traders out there, probably find they're not doing very well either. You're just not getting the pullbacks to get the entries, and you're not getting the extensions on your FIB extensions, the 168 extensions, you're just not getting those either. Bizarre. But anyway, this is what the market does to you. Changes. Afternoon, Abdi. Mumo, afternoon. Button filling mode feels more controlled too, because you feel like you've got too much on. You can just wait until you unwind a bit before putting on more positions. Yeah. So yeah, I mean, if you're not going to use automated scaling, then yeah. Yeah, so if you get into a position and don't use automated scaling, just use button trading only, and you decide when to take the next trade. The only downside to that is obviously you're going to miss entries. So, and you need to be sitting out on these 4-hour charts a lot more at the moment, and finding these levels. It's just, you know, but that there was an RSI extension, you know, and if you took that after that move, you know, that move, and it didn't respect that level, there's still nothing you can do about that. But you've got that on your side. There is no way they're going to hold a move longer than that. Yeah, you look at history. History is your friend. This is why, in the boot camp, I say, look left. Always look left. The only thing you've got is looking left. That's all you have. History. Doesn't mean it's got anything to do with the future at all, but look at how the market has moved in the past. Yeah. And look at what happens afterwards. Yeah. So when you're looking for your take profits, yeah, if your break even is here and every time it's pushed to that level, you've got a pullback of that size, don't take profit there. Try and hold it. It's very, very difficult to do, but you know, this is a normal market. I moved from H4 to H1 because H4 was really struggling. Right now, H4 is where you want to be. Yeah, but for the last 3 years, 2 years roughly, H4 hasn't been performing anywhere near as well as H1. Are we now going back to needing to trade H4 RSI extensions and forget about H1 again? This might be the time to start switching back to that. I switched over from H4 to H1 when the interest rate rally started, because there was no trades. So it might be a time to switch back to H4 and start trading H4M15 again, or H4M5, whichever, and just using 80s. Yeah, if you look at the RSI 80s, yeah, you got a short on the pound New Zealand at the moment. Nothing else. You're not going to get anywhere near as many trades on, but the trades you get are going to be super, super high strike rate. Yeah, there's one there, and there's one there, and there's one there. Tick, 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 tick. Hopefully tick. But yeah, I mean, you know, that's what I used to trade before I switched down to H4, switched down to H1M5. That's what the bootcamp teaches you, H4M15. Maybe it's time to switch back. Just seem to be getting you're getting in too early on H1 at the moment. But I'm always loath to change strategy, though, because when you change strategy, it's usually the wrong time. How's RSI 2? It's early days yet. So at the moment, it's sitting in a bit of a loss. 4% down. But, you know, we know we're expecting somewhere around about 10% drawdown from back testing. So it's, you know, this is what I said. I remember when I launched this, I said, you watch, this will go straight into drawdown at the open when I start the trading, because it depends when you start your trading as to how much drawdown you're going to take, doesn't it? And when I started this account, what's happened since I started this account? Multiple instruments have gone parabolic at the same time. RSI2 doesn't work in parabolic markets. So we're waiting for unparabolic markets. And it will recoup all that loss, but it's a case of just having to sit through the strategy, isn't it? So always the way in it. This is why I say when you start a proper valuation, whether or not you pass or fail that evaluation, it's got nothing to do with your strategy. It's to do with when you start your evaluation. If you start your evaluation there and it goes parabolic for 2 weeks and you're mean reverting, you're dead. If you start your evaluation there, you go win, 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 win for 2 weeks. Stage 1, pass. Stage 2, pass. Stage 3 goes parabolic. Loss, 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 loss. Yeah. The strategy overall has a long-term edge which plays out. But on any day, week, or month, it will either go wins or losses. If you get the parabolic push when you are mean reversion shorting that, you will go into drawdown and you will be out of your evaluation or blow your prop account. If you start a new strategy that has been working beautifully for, forget that's there, for 1, 2, 3, 4, 5, 6, 7 weeks. 7 weeks. Yeah, you've back tested it. Yeah, you've forward tested it for 2 weeks. You've gone, that's amazing. 9 weeks, beautiful. You start the strategy there on live funds and it goes parabolic for 2 weeks. Why does this strategy not work? It does. It's just not going to work in this condition. Market conditions are not right for the strategy. You can't control the market conditions, but you can control whether or not you stick with that strategy and recoup your losses for those 4 weeks that you lost during those 2 weeks. No, you can't, because it's lost money and you go, scrap that, I'm going to find something else. But you don't get the money back. This is where everybody goes wrong. They jump ship, they system hop as soon as they see a strategy failing. It's going to fail. This is what backtesting is all about. It shows you the failure rate. I'm fully expecting to go into drawdown by 10%. I'm nowhere near it. I'm not even halfway. Fine. Just started it on the wrong week. Last week. Just the way it works. I'm definitely letting the EA scale in for me, but just deciding the initial entry and direction on my own. Yeah, that's fine. Also, what you can do as well is, rather than use, I mean, for your scale-ins, 3/4 of an ADR is absolutely fine. You could set it wider. So set it to 1 ADR so that it's got to, after you've got into a move, you've got to have a good, strong push against you before you take another entry. But you can take a manual before that. So you could put it into sort of super cautious mode. You get in with an entry, which is extended. You set the scale in a little bit further than you normally would. But if you see a good level and it seems to be reacting at it, you take another one and then let it get in one ADR apart. So you're never going to scale in too tight, really. But also, if it pushes really hard, you're not going to get in too quick. That's the key at the moment, is the speed of entry. Some of these trades just getting in a little bit too tight because of the way that the market is moving. So the spacing's fine. It's just the multiple parabolic weeks. It's just, you can't do anything about these weeks. And the worst thing is, it's just no need for it, is there? If Bailey'd come out and say, yeah, sorry, guys. Sorry, I forgot. We hit target. We are dropping interest rates. That's what he should have said when the CPI number came out. Didn't mention it. Oh, it's not quite where we want it to be on services. You didn't mention services. You mentioned CPI. You told the market if we hit 2% inflation, you'll drop the targets. You'll drop the interest rates. We did it. Now you're saying, actually, there's a part of it I don't fancy. I know. Let's get the goalpost. And as soon as you take the shot, we'll put it over there. Not happy. Mr. Liar, Bailey. He's not a liar. He just hasn't told us, has he? Anyway, can't do anything about the banks either. This is hopefully sinking in that nothing is in your control. Doesn't matter how good your system and strategy is or what you do. This thing does what the hell it likes, when it likes, for as long as it likes. It will stay irrational for longer than you can stay liquid. Very key, important thing to remember, which is why you need to draw down control and get out. Don't hold on and hope. Not going to happen. Right, I'll leave it there today. NASDAQ, from the indices perspective, NASDAQ, it did just get my target, look. So got sell stop ready to go. There now. Sorry. Whoops. EA's moved it up. So got sell stop ready to go. Nice hammer gone in at yesterday's high there. Beautiful rejection, limit orders triggering at yesterday's high. So looking for an aggressive exit on that one. Exactly the same as the FTSE today. So the FTSE was a very similar thing. So got hedged. Well, no, got short there, long there, pushed up, exited the longs up here, short, exit. So there's your aggressive exit. Obviously, I could have made 1,000 times more money, but if it had done that, I would have been crying. So you take the money, run. So NASDAQ, very much the same sort of thing. Looking for the next bear move to start. I will get in on the sell stop. We just had some news by the looks of things. This market's just suddenly gone crazy. That's really helpful, Goldman Sachs. The Fed has a solid rationale for a July rate cut. So we've gone from January next year, 2 weeks ago, to this month. Unbelievable. This is Bank of Canada. Some news coming out of Bank of Canada. Oh, no, that's the hourly candlestick. That's right. That's right. That's just the hourly candlestick. That's why we're seeing all this volume coming in. It's a lot of volume comes in on the hourly because traders obviously trade the hourly. So, yeah, shorts looking for an aggressive exit on that one. Dow Jones just stuck. We moved up to there. We moved down to there. So we've basically got 1 hour up, 1 hour down, back in the middle. Absolutely nothing you can do with the Dow Jones today. S&P, long break. You are just about to hit ADR. In fact, it's just triggered into ADR there. So we're at all-time highs on the S&P. We've got an ADR hit about to go in. This is the hourly. So we're out of those highs. So same as that. When we get out the highs, pull back. Yeah. Usually when you make a new high, you eat up all those orders sitting above the highs and it exhausts. And then it will, if it needs to, start the new leg up. So basically this is an exhaustion play. Failed breakout, whatever you want to call it. So market pushing above that level will get exhausted and pull back into this area. So that's what I'm trying to play. ADR upside. We are just hitting ADR now. So just 4R to the upside, so it's a fair old move. Big move though, look. Thanks, Ian. Don't forget, Bailey will drop rates only after you've closed all your pound shorts in a loss, not a moment early. Exactly. That's exactly what he will do. I will go, screw this. I'm out of the pound New Zealand. I can't hold it anymore. 10 minutes later, financial juice will light up like a Christmas tree. Bailey announces interest rate cut in August. You watch. So I'm just watching this price action. This is a solid move from the S&P. Look. So we just pushed above yesterday's high on the NASDAQ again. So same thing. Limit orders triggered. Push through. So looking for a false breakout, pullback. And then obviously if they want to continue it, they can do. But we're looking for that pullback. I might close this S&P up here. We are at ADR. So I'm going to try and get out of the S&P as well. Aggressive entry. So looking for an exit when we pull back down. Now, can't do anything with it. Stuck. There we go. We'll see how we get with those this afternoon. Right, that's it for me today. Anything else you need, let me know. Otherwise, I will be back tomorrow at the same time. 2:15, 2:30, 2:15. Where am I back? What am I doing this week? 2:15 tomorrow. Yeah. No, that's today. Sorry, yeah. No, that's today, 2:15. 2:15 tomorrow. We'll look at what's going on tomorrow. Obviously, we will have had that CPI number on the CAD and the retail sales. So we'll basically be analysing what's gone on there. And then back to normal for the rest of this week. All right. Next week, I'm off on holiday. So I'm not here from... Am I doing Monday? Yes, so yeah. I'll do Monday, but I'm off from Tuesday next week. So I'm off for a week having a holiday because kids break up from school. So I'm off next week. I'll be managing positions and stuff, and I'll be around on Telegram and Discord, but I'm only here for this week. And off for a week's deserved rest. Some sunshine. Just as we get a heat wave in the UK. All right, have a good one. Anything you need, let me know. I'll be in Telegram or Discord. Other than that, I will see you guys next time. Have a good day.